Welcome everybody. So there's two of us speaking today. It'll be me and Dom from NASDAQ, and you probably are aware of us as a marketplace. We're a fairly large one. I want to give you a little overview of what our business is and then explain a lot more about why we're here, as opposed to sitting back in New York and doing what people know us as. So the business kind of breaks down into three areas. The black circle on the top is the one that people pretty much know NASDAQ for. So people think of NASDAQ and they think of the stock exchange, and they maybe think of some of the listed companies. The blue circle is kind of like our data business. It makes sense that running some pretty large marketplaces, we make a fair bit of money selling the data from those marketplaces for people to trade. But the purple bubble is the reason that we're here, and part of NASDAQ that a lot of people don't understand or think about. But it is the fastest growing part of NASDAQ, and it's that we're a technology provider to a lot of other marketplaces. And I think just from talking to a few people here today so far, I don't think a lot of people realize that. And part of that is probably because the marketplaces to whom we provide technology have traditionally been exchanges, clearinghouses, central securities depositories, but that's changing now. So here you can kind of see the top half of the slide that shows a little bit of a further breakdown, and we've switched colors a bit, it seems. So the part on the far end is our market technology business, and that's the part that I'm here representing, and that's the part that provides this technology to others. Now, we're only, at the moment, 13% of the company, which is fairly substantial given that NASDAQ's a reasonable sized company. But what this doesn't show as much is how much emphasis is on that piece of the business, how fast growing that piece of the business is, and how big a part of the strategic future of NASDAQ that division is looked to as. But here we really only have certain parts of the slide on display. But you might be able to detect from the formatting that there are about 100 marketplaces that we provide technology to, and that's in addition to the 30 or so that we own and operate. So the stock exchange that everybody knows about is one of those 30. There are 6 options exchanges in the US that we run. We run most of the large exchanges in the Nordics. But in addition to those 30, and this is the really relevant piece, there are 100 marketplaces around the world, and it's really all over the world, to whom we provide our technology. And in some cases, those are sort of front and center business applications, matching engines, providing order types, and so on. In other cases, it's ancillary technology like market surveillance technology, things like that. And in some, it's more the underlying transactional platform. But what you'll see in here, if you could see some of the names, and if you're familiar with the industry, it includes some of the very smallest exchanges in the world. So the exchange in Papua New Guinea trades on our software, but some of the very largest, including some of our competitors. So Hong Kong Exchanges and Clearing, JPX Group, are 2 huge exchange groups that use our software for a lot of their core trading functions. There are a couple names highlighted in purple, and it doesn't matter as much what they are, so much as the fact that the purple area is the part that we're now aiming to grow tremendously. These are the exchanges and marketplaces, frankly, that exist outside of the exchange industry. So if you could see some of the purple names, you'd see an affinity points exchange, a reinsurance exchange, a digital advertising exchange. You can, yeah. Yeah, that's good. Oh, it's good. Now you can see all the names. You'd even see the Hong Kong Jockey Club, where we run a platform to create new horse race betting products. And Tabcorp, the largest wagering provider in Australia, where we're going to be doing the same as of this summer. So we have this huge strategic initiative going on now to provide our technology to a range of marketplaces that are outside of our core space. And what we're finding is that very few of them will look exactly like the exchanges that we own and operate and the ones to whom we provide technology that's very similar to what we own and operate, at least in terms of business model and the really core business applications. But the underlying technology, the architecture, the messaging layer, the way we handle data, these things are relevant, we think, to a wide range of marketplaces. And this is a relatively new initiative for us, but, and this is one of the early, I guess, efforts at outreach that we're making. But we've got, in the past, we've had a lot of these coming to us. They know that we run a certain type of marketplace. They're aiming to model themselves more off of an exchange. They come to us because another thing that this may make clear is that we are by far the global leader in providing our software to exchanges and clearinghouses. So obviously they're now aiming that actually. Yeah, cool. So the sort of trends that push us here are things that you're probably seeing and are probably also core to why you guys are here. So we see technology enabling other forms of transactional businesses to get a lot closer to the kinds of things that we're doing. So connecting producers and consumers, providing fair value to people. Globalization is obviously a trend that impacts this here. And we see kind of, I think the initial vision for this internally at NASDAQ was to look for non-traditional exchanges, things that, businesses that trade products that look like ours but in other industries. And that is definitely a piece of what we're doing. So to the extent that there are people here running marketplaces that might be interested in creating two-sided marketplaces out of them, adding order types and other products like that, that's something we're interested in talking about. But we think the bigger opportunity still, and the part that maybe is less obvious, is the platform that everything sits on. And this is where Dom will start to make more sense than I do as he talks a little bit about the sort of the technology side of things and why the technology that we have, we think, can become very useful well beyond our industry, or the industry that people think of when they think of NASDAQ. So, as an example, some of the industries that we've been looking at, we're already working with. So, there's one large loyalty points exchange that, well, hopefully large. It's a business-to-business exchange. It's an exchange where airlines seeking funding frequently will sell large blocks of miles to banks. And this is a company, the Affinity Capital Exchange, that's basically buying software from us and launching soon to facilitate more of a marketplace for that, as opposed to these one-off deals that have happened in the past. NIAX is a digital advertising exchange. They're selling futures so that people can buy ad space in advance. Shipping and logistics companies. It's a large group where there's, I think, a lot of startups, but also a lot of incumbent players are looking at becoming more like marketplaces in the way that they operate. Some of them are very old school, so there's steps to take between here and there, but it's an industry of interest to us. And insurance is another really good example where things happen in a very traditional way today. There's a lot of paperwork today, there's a lot of regulation today, but there is room, and we have one so far that we've signed up for a more exchange-like model, but also for more of the underlying technology to play a role in some of the insurance marketplaces that are around today. So in an effort to leave time for questions, because I think we've got a relatively small group, I'm going to kind of speed into Dom's part of the presentation and ask him to come up and talk a little bit about kind of why financial technology makes sense for marketplaces that maybe sit outside of that arena.
Yeah, so I think everything you've heard from Scott, really from a technology perspective, at the core of these systems, you're really just looking at a transactional system, right? So what are you actually trying to accomplish in a marketplace? You're trying to move some type of asset from producer to consumer, right? And ultimately, what you're trying to do is run a search algorithm that actually associates the value that a consumer is willing to pay with what a producer is willing to actually sell his or her asset for. So when you think about these systems, the way we look at them, and we have a project underway called the NASDAQ Financial Framework, and this is the underlying platform technology that we're looking to sell to folks who are looking to build platforms and marketplaces. At its core, it's a very deterministic, high-speed transaction bus, right? It's an event-driven system. On top of that are sets of core services that you can build upon and use to build your ultimate business applications. So if you need to build matching capability, you could build those at the highest level. However, we would provide you, because we do today, for example, and I think it's on one of these slides, we do things like transact nearly 1 billion shares in 800 milliseconds on a given day when the Russell 2000 rebalances, right? So we already are engaged in this extremely high performance marketplace because that's what the capital markets actually require today. And what we're saying is that this underlying transaction capability can now really expand into other industries. And so, we, to Scott's point earlier, we process a lot of data. Like, we understand what it means to have bots sitting on the other side of the two-sided marketplace, because we actually run into bots all day long, because that's how trading actually works in the capital markets. So our systems are designed to do so. So kind of coming back to this, it's really about building something that's highly reliable. I mean, we try to stay off the inside fold of the Wall Street Journal and not have the stock market go down every day. It's a 5 nines reliable type system. So it needs to be reliable. It needs to be highly deterministic. That is, you can't have a platform be unfair and have one party gain, better performance than another party who's engaging in the use of the platform. And then as kind of we look at the space, and as Scott mentioned, we sell to other exchanges around the planet today. The value proposition is not in the underlying platform, right? So if you're out trying to build a platform business, if you're an Uber or an Airbnb, your business thesis is not, oh, let me go build the best transactional platform on the planet. Your business thesis is, how do I get a rider and a driver to be matched and to actually get the car to the right place? How do I get an apartment actually sold to someone who's interested in renting that, or rented to someone who's interested in renting that apartment? And so what we're saying is, we believe that this underlying technology is applicable across many different marketplaces and many different exchanges. And we're looking to build the building blocks to support that and the frameworks that are required to support that. So at its core, it's a cloud-first technology. The goal is to operate this all in the cloud. We're looking at it from the perspective of you can come up, you can maybe put your credit card into this system and say, I want to stand up a marketplace for doing X, Y, or Z. We will spin that up for you. In the cloud, you'll be able to connect your clients to that marketplace and they'll be able to transact. You'll come in and do some specialization around the software side and say, hey, our matching algorithms are particular matching algorithms, but we'll give you all the underlying frameworks that support the actual matching itself and things of that nature. So that's very much the direction we're looking to go into.
So with, I guess the biggest question in my mind, maybe in the room, is with crypto, how are you guys viewing ICOs? Are you planning to support crypto?
We've had a lot of crypto exchanges come to us, because I think, as opposed to a lot of the marketplaces that maybe are around this room, and maybe there are some that are crypto marketplaces, they do really view their businesses and their exchanges as being like ours, and they do quickly see that they have problems scaling from what maybe they built initially. And so we are providing software to some crypto exchanges now, but we are being careful about it, because a lot of them, there are some reputational concerns around some of the possibilities that you could have in the crypto marketplace. So we're a little bit selective in that area. We're not being as active in the outreach to that area, but we are fielding some inbound.
I think there's probably a couple of dimensions. I think, NASDAQ slapping their name on a crypto marketplace and calling it the NASDAQ crypto marketplace is maybe a bridge too far for NASDAQ today. But if a crypto exchange wanted to run our technology to operate their exchange, I think we'd be open certainly to having our technology used at that crypto exchange. And then probably the other dimension to note is that as part of some of these services, we actually offer blockchain services under the hood. So if you're looking to digitize assets using kind of the blockchain style technologies, and then actually to use those technologies to transfer ownership using blockchain technology between different vendors. You can actually do this in this framework as well. So we have a vision of you set up a marketplace where you can establish pricing, will produce pricing, and then as the transactions occur, if you want to use blockchain to actually move assets from digital wallet to digital wallet, you can do that, and then you can materialize and dematerialize at the edge. So, for example, let's say you were standing up a gasoline marketplace or a gas station for a gasoline marketplace to service self-driving cars. Self-driving cars might come into this marketplace and say, oh, I see that some gasoline is being sold in some corner of San Francisco at a particular price. I'm willing to buy at this point. I transact in some digital currency to buy some digital tokens, some digital gasoline tokens. Gasoline tokens transfer into the car. When the car shows up at the gas station, it returns those gasoline tokens and gets filled with gasoline. Those are the kinds of processes.
We would look at sort of tokenized marketplaces very differently from pure just crypto trading marketplaces. Creating a token for something is a whole different proposition. That's a lot closer to what we see as part of our vision than just allowing people to buy something.
Yeah, and certainly we understand how, kind of the ICO world, it's not tremendously different than the IPO world at a 30,000 foot view. It's in essence a race that's going on. It's at some level it's mostly an auction. A lot of them are auctions, much like an IPO is when a company goes public. So we've been looking at those technologies for probably 4 or 5 years now.
So how does an ICO versus IPO differ these days? Like on a high level?
I'd say ICOs today are basically unregulated, and IPOs are highly regulated. ICOs can have many different kind of auction styles that they may choose to use to kind of sell coinage or to actually issue coinage. Whereas IPOs are extremely structured. Generally speaking, there's probably only 1 or 2 approaches you can take from an IPO perspective, right? There's a roadshow for IPOs, all those kinds of things that you would expect. There's an underwriter, some big bank that's in play. In the ICO world, you stand up a web page someplace, you say, I'm selling coinage, you put it out on Twitter, some people go to it and say, okay, cool, another thing I can make a few bucks on. They jump into it if they believe the thesis of the business behind the coinage, and so it's just unregulated versus what you might see in the public markets.
What stage of company are you targeting with this? Because obviously you're going to have to build this tightly into your infrastructure. Are you looking at early stage startups, or is this more mature companies?
Well, I think right now, as you saw, our core business is focused kind of on mature companies, but as Scott mentioned, this is really where we're trying to move towards. So what we believe is that a platform economy is emerging, and we want to be there when that platform economy emerges. So certainly we're very interested in working with small companies.
We're trying to become very startup friendly. I wouldn't say we're quite where we need to be yet, but we're aiming to have a service delivery portal of some kind where even somebody just working on a project at a university could go online and set up a demo of some kind. And maybe that doesn't cost them very much or anything. But at the point where it starts to need to scale and become a business, we're looking at ways to change our commercial model so that we're very friendly to early stage marketplaces and ultimately become successful moving into that space on the backs of a few that really succeed. So
that's a vision statement. Is that 6 months, 12 months?
Between those two, probably.
Yeah, and I think, generally, if you're interested in working with us closely, we have an entrepreneurial center here in San Francisco. So you can certainly knock on the door there if you're, kind of an entrepreneur and you're interested in, hey, what happens as I start thinking about taking my company, public, or, I want to learn what NASDAQ does and what it means to me over time. Certainly knock on the door down there, come in. I think we have all sorts of conferences we run.
I think another point that's relevant to a lot of people in this room is we're starting to get pretty interested in working with the VC community to the extent that VCs are seeing marketplaces that sound interesting, sound like they have good ideas, but maybe aren't built on technology that's designed to scale to the level that the VC might aspire to see them get. And to the extent that we can help and collaborate, we'd be very happy to start getting more and more people onto this platform. And then someday there's a vision to benefit from a network effect, maybe a little bit different from what we were hearing about in the keynote, where you just need to get a marketplace started. But the more marketplaces we have sitting on a platform like this, the more there's the potential someday for these marketplaces to interact even with each other across the totally different businesses.
And maybe to add a little bit more than that, we actually have a small fund in-house, so we actually do put out some minority stakes in very early companies as well, if we believe they're kind of aligned with our vision.
So I suppose flowing from the prior question, what kind of, to the extent that you can share this with us, what kind of, and as you've been revising your commercial approach to this, what kind of minimum revenue threshold are you looking at in terms of the partners or the potential clients that you would have that you think is necessary for this side of your business at NASDAQ to be able to sit down and say, we'll seriously work with this party, because obviously the space you're looking at is very variable in terms of financial capacity, but not just that, but also the modalities and terms and conditions for actually transacting this kind of.
Our existing customer base in the market technology division includes some really tiny exchanges that pay in the 6 figures every year. Some that only take our market surveillance products that maybe pay in the, not even the upper 6 figures every year. We have other customers, some of the largest, that pay in the tens of millions a year. Now, we're doing very end-to-end sophisticated things for them that are probably not relevant to any business that's not in a highly regulated space. When it comes to servicing kind of startups and other technology companies, frankly, obviously big technology companies we can have a different kind of conversation with, but on the sort of startup end of things, our goal is to make the sort of, I'll reluctantly call it the sales process, a lot less expensive for us, to where people can just go without even contacting us and get something started, get a demo built. We do find that a lot of the startups that come to us initially just want to be able to demo something and say they're partnering with NASDAQ to get funding, and it helps them to get funding, frankly. And we're often, if we like the company, we're often willing to help in that way. The vision would be to make the process of getting someone onto the platform so inexpensive for us, and I think we're pretty close to being able to get there. Make it so inexpensive for us that somebody could get a demo up and running at an extremely reasonable cost, maybe zero if it's a university project or something like that. But as soon as that goes beyond a demo and customers come into play and there's revenue to talk about, that's where if we've taken a risk to get started, we'd like to be compensated to a degree, and we'd like to grow with some of these businesses. I could also imagine, whereas these businesses grow, their needs become more sophisticated. They need a lower latency platform. They need more throughput on the platform. They may need to customize it in a way that isn't possible in the configurable version that we set up for everyone to use at really low cost. And that's where I think we start to engage the way we engage with our current customer base, the larger customers, and look at what customization would cost. And by the way, we're also generally willing to look at revenue shares in addition to normal fees, again, if we like the business model. Left on this time.
What's, of your customers, you don't have to be super specific, but what's the least financially tight marketplace that you're working with?
I mean, a digital advertising exchange is pretty different from a financial marketplace. The loyalty points exchange is probably closer to a financial marketplace than it sounds. The Hong Kong Jockey Club, I mean, I view that as a financial marketplace because you're just betting on something, but we're creating new bet types for horse racing pools, and we're aggregating liquidity where different products have sat in segmented buckets and allowing new products not to cannibalize from existing ones. So that's, in most people's view, totally non-financial. And I think when you just look at any kind of platform business, there's a role for a really reliable messaging bus to play. There's a role for the way that we ingest and store data to play, because not everybody needs to reinvent that for themselves. I mean, if you look at just some of the options exchanges that we run, those are the most data intensive of the exchanges, because as opposed to a stock exchange where you might have a few thousand instruments, an options exchange has 100 times that many, because each stock will have 100 different option series on it. You get millions of messages per second that come out of that kind of trading environment, and we have a regulatory requirement to store that data for 7 years. So you wind up with tons of data, and we have a big business in selling that data to other people. So storing it in a way that allows us to sort of extract the relevant parts, help people run analysis. And we don't envision that we will come up with the best kind of analysis for every business in this room. It's more a matter of allowing businesses to not worry about how they're ingesting data, how they're storing it, and worry about how they want to analyze it so that it's all set up in there.
And for that matter, actually also establishing an ecosystem where all that data actually sits kind of in the same place, so that as different marketplaces need to access information from other marketplaces, they can actually weave that data together to form and enrich kind of new markets, if you will, from it. So if you're able to gain access to the stock market information, I don't know, in your Robinhood or something, right? It's of interest to you, or maybe you need some weather information to make some trading decision, and we happen to have that as well because we have some, some marketplace that's dealing in weather.
But it's also, I think there's very data-intensive businesses that a lot of people wouldn't call marketplaces at all, like IoT companies. If they're really monitoring everything that comes out of every device that's everywhere, that's a lot of data. Maybe they're not keeping everything. Online video game streaming. I won't talk anymore about online video game streaming. Ride sharing is another example where I'm sure everybody's tracking a lot of what's going through those platforms, but maybe not every inch that every driver moves and every opportunity to provide a ride to every customer and so on. And so being able to capture vast amounts and store it for use later for purposes that weren't envisioned originally, that's the sort of thing that we're interested in looking at that's based on marketplace technology, but not even necessarily relevant to the market.